Hello, everybody, and welcome back to FX Street. Today, we're going to be taking a look at Shiba Inu and the Adam and Eve pattern that is going through. We're going to pick it up where we left after the discussion in the last week, right? So, before we actually dive deep into the technicals, I want to direct your attention to the FX Street YouTube channel. If you enjoy the content that we put out and want to stay updated to the hottest trends in the cryptocurrency market, please make sure to hit the subscribe button and click on the bell icon. You can also follow us on Twitter at FXSCrypto. And if you like what I do and want to stay updated to the altcoin charts, trades that I'm taking, please make sure to hit the subscribe button just give me a follow on Twitter at Mangiako with the 0 at the end. Right, back to Shiba Inu, right? Not a lot of states since the last week. The Adam and Eve pattern, which usually contains two swing lows, two valleys here. The first valley is a V-shaped valley. It's extremely sharp. And the second one is a rounding bottom of sorts, right? The pattern isn't complete. The rounding bottom here needs to retest the neckline here at 329, which will complete the pattern. But a breakout of this pattern will occur if we get a daily close above 329. So far, Pacific price seems to be holding above this daily demand zone here, extending from 235 to 254. And there seems to be a pennant formation in here. I'm just going to look in a second. Yep, as you can see here, there's a good pennant formation here, and if you look at there's a 10% upswing possibility, which is interesting because it would collect the liquidity resting above this previous high from here on 28th March at 296. Right, this is if you're expecting a bullish breakout, right? And bearish breakout would 10.61. Okay, so this is gonna be bearish because it would, if you get a daily close, below the demand zone here, demand zone's lower limit at 235, it would be invalidated, right? So you don't want to see Shiba Inu break to the downside, but considering how I'm bullish on Bitcoin, I don't expect it to break down, right? So yeah, if this video gets posted early, then you could capitalize on this trade by longing this, right? And if you want to if you want to play it safe, you could probably close it around here at 296. But if you want to take on a little more risk, you could take profits at 329. Obviously, because that would complete this Adam and Eve, the larger Adam and Eve pattern. Yep. Right. And just for a second, if you forget this, right, from the current position, Shiba Inu, the larger Adam and Eve pattern predicts a 38% upswing after a breakout, which would put it at 456, roughly $456, right? This is a 71% upswing. Now that you can see there's a pennant formation here on 4-hour time frame, you could just play it a little safe, keep your stop losses below the demand zone here, 13% downswing, and then you could book profits here, which is a 5.12 hour trade. You know, considering how these altcoins, if you look at this particular, move here, this was a massive move. It hardly took Shiba Inu 4 days. 4 days to run 50%, 60%, 75%, right? It only took it 4 days. So imagine if this happens here right now and you're already in a Shiba Inu trade, you could easily make tons with this setup, and you could also, imagine doing it with leverage. Right, so yeah, the upside here is capped at 454 based on the theoretical targets, but you would be better off booking a little bit of profits at 400 and then let the rest ride for 454. And you could just probably keep a very tiny amount and see if we can get a wick up to 494, roughly 500. Right. As for the downside, like I mentioned, you don't want to see it. You don't want to see Shiba Inu produce a daily close below the daily demand zone's lower limit here at 235. If it does, then you can expect the price to come back down to this March 13 swing low at 211. So yeah, that pretty much sums up analysis for Shiba Inu. If you enjoyed this analysis, please make sure to hit the subscribe button, like, share, and comment.